Hello, everybody. Thank you for being here. It's terrific that you have taken time out of your wonderful evening to spend some time with us because we have got something really, really special to talk about. And this is something near and dear to my heart. I don't mind doing the warm up when it's something that is so near and dear to my heart as this topic is tonight. It's very, very special because I am not kidding you. This is something that can give you not only the ability to have some terrific water cooler chat if you want to give it up, because this is so good that you're not going to want to give up these secrets. But maybe to friends and family, maybe at Thanksgiving, you'll be like, listen, I love you guys. I'm going to tell you something useful. So, all right, where's everybody from here? Let me take a look at the chatty. It's got to be in the Option Pit live room. Too good to share. That's right. Andrew and Hannah are going to be with you soon. So who likes volatility? So I want you guys to put in the chat, yes or no, you like volatility. Seattle, terrific. Ahmed, Sue, hello, welcome. Thank you for sharing some of your valuable time with us tonight. It's a no. Let me tell you about volatility, because I know a little bit about volatility after decades of facing volatility every day. My goodness, I think what have I done? Like 500 options expiries. This is fun. You have no idea, Michael. Well, that's terrific. I like that answer because that means you are a clean slate. You are fresh to learn without any preconceived notions. Volatility gets a bad rap. Let's think about what volatility means, right? Advisors are always talking about how to lower volatility, right? We got to lower volatility in your portfolios. What are your risk-adjusted returns, right? It's not just good enough to talk about what are your returns. What are your risk-adjusted returns? That means returns adjusted for volatility. The higher, the better, right? 10% return on Tesla, not as good as 10% return on J&J, because Tesla did this. It zigged and zagged. So risk-adjusted returns, you might hear about stuff like that. Kind of fancy. It just means how did volatility, affect that number? So is volatility really bad? Well, think about it. Was it good to buy S&P at 5,000? It's 5,900 now, last I looked. We've climbed the wall of worry, which is directly related to what I'm going to tell you about in a moment. So, of course, volatility can be fantastic. And you might say, well, as an investor, I don't want volatility. You do. You want volatility, right? I don't get all my money up front. Maybe if somebody just gave me $300 million up front, I could just invest. And then the S&P can go to 10,000. I don't want it to go to 10,000 yet. I'm going to get a check. I'm going to make money. I'm going to have real estate sales. I'm going to do all these other things. I have a couple companies. I get dividends. I'm going to put money in over time. So take your time, S&P. I want it to go up steadily over time, right? Yeah, let's learn. Let's learn what to do with this. Let's learn what to do with volatility, because this is going to be your hidden weapon, but it's going to be in plain sight for you guys once you learn it. So I want to talk to you about that hidden edge, right? Volatility means opportunity. So you don't want things to just go straight up. But volatility to a trader, of course, is wonderful, because as traders, we want things to move around. We want things to come down. We want to buy them. We want to, scalp. We want to make all this money throughout all these gyrations in markets. And we have had some gyrations lately. So it's been terrific. We've had some incredible trades at Option Pit. Incredible trades. So volatility can mean a lot to traders who understand it. And I want you to pay very, very close attention to this, because this is actually something that I've mentioned a couple times, and it just fits so perfectly here. I often tell students that even if you never trade a single option in your life, you are going to be miles ahead of everybody else. And I'm dead serious when I say that. If you understand volatility, and I mean really understand it well, truly understand it, and the right signals that can tell you about what it's really doing, it's giving you an idea of durability. Of what? Fear, happiness, complacency, a bit of don't care. It's going to give you an idea of, do people not really care? Do they not know? So that's very, very powerful insight, because that's what drives markets, right? And that's what Andrew and Hannah are going to be talking about very, very shortly. Volatility, if you understand it, is going to help you understand what is under the hood of markets. So even if you never trade an option in your life, I would say you've got to understand VIX. You've got to understand some of those measures that are going to tell you the story of fear and greed every single day and moment that the market is open. You need to understand it. And Andrew makes this so incredibly simple with a single number that can change the way that you look at risk and opportunity. And not only that, it's going to tell you where that opportunity lies and when it's about to flip, switch, pivot. Those are important moments. In fact, as options traders, we're always trying to think of what is that next thing that is going to turn things the other way. And the world of volatility can help you with that. So we've seen these incredible ranges in markets. And I've been saying lately, just understanding volatility, I've been saying, nope, pain point is up. A month ago, I said, 3 weeks ago, I said, nope, pain point is up. Because we remember those ranges? Those were the widest ranges we'd seen since the global financial crisis. And once those came down, this is just one little example, once that broke, then volatility was to slowly, quickly, and then slowly seep out of the market. It almost has to, coming from those levels of fear. So one thing we know is that, I'll tell you something else. I don't know where the S&P is going to be in 3 years. I mean, I hope it's up. Might be down, might be up, might be right here. But I 100% do know that volatility is mean reverting. It gets high, comes down. It gets low, goes back up. That is very, very powerful. And how do I know that? And why does it happen? Well, I know it because I've been watching it for 30 years. But why does that happen? Because humans and their behavior don't really change. Circumstances change, the scenery changes, the president changes, the companies in charge change. Might have been Kodak 50 years ago. They messed things up. Now it's Apple and Nvidia, right? The scenery changes, but people and their behavior don't really change. They're predictable. There's fear, there's greed, there's bulls, bears, everything in between. And I can bet my life on the behavior of volatility. And there's great power in understanding how to take advantage of it. And there's the one number that we're going to get to in a moment that has this incredible potential in it. And so I'm super excited for you guys to be here. I'll tell you what, this is actually information. We got here, Carol, thank you. River, love that. The Creole. This is info that I think makes me special as a trader. I always kind of feel like a sense of pride that I understand volatility. Oh yeah, the VIX is doing this and that. And so if you learn this, I'm almost protective of it, but you have a chance to learn this from the best company out there. Trader after trader after trader who has traded volatility. Andrew being the king, the vicar of volatility, as you guys know if you've watched any shows. So you're going to be in a special club. I'm not kidding you. Ask Nina, Vicky, anybody who's in the classes. I'm not a BSer, but I have every confidence that if you watch and absorb what AG and Hannah are going to deliver tonight, it is repeatable. It is predictable, and it is there for the taking. It is that hidden edge, but it's going to be in plain view for you once you learn it. And so this is going to be a real moment. WA, good to see you. He is the Viking of volatility, the vicar of volatility. And he is going to give you a show tonight. So this is going to be a moment for you guys. It's going to be a very important moment. So stick with it, absorb it, take it in, and learn about what that one number is, because it doesn't have to be complicated. There are 500 charting indicators out there. You know which ones I use? Like 2 or 3, because they work. They've worked for 30 years and they're going to work for the next 30 years. Life doesn't have to be complicated in markets. And we are going to distill one of the most amazing and seemingly complex things down to one number. So without further ado, the one, the only, the wonderful Hannah Selner, who is on deck, and the dashing Andrew. I'm sure he's going to be dressed up for you as well.
Hello, everyone.
There you go.
Hi, Hans.
Hey, Hannah.
How you doing?
I am doing fantastic. I'm really excited about tonight.
Me too. I am very much looking forward to tonight. Thank you guys for joining us. You're here right on time. Andrew will be here in just a few minutes and we'll get started. But if you're new and this is your first time joining us here at Option Pit, first of all, welcome. Second of all, we have an amazing chat that's right over here. It's open to everyone. So just create a username for yourself. It takes 1 minute. And you can actually use that to ask us direct questions about tonight's presentation. We do not gate this chat at all. It's totally 100% open. So don't get crazy. But if you have questions, you can ask them and we will answer them. So Hans, that was a great intro. I know that you are, as many professional traders are, very familiar with volatility, which I think a lot of retail traders or people that are new to options think of volatility almost as sort of a curse word or something that's negative. But tonight we want to show you how that's something you can actually harness. And you have made a career on the floor, Hans, of also harnessing volatility. So it's exciting to have you here also. And I'm sure you're looking forward to what Andrew's going to cover.
Very much so. Thanks so much, Hannah. And you guys have a fantastic time. I guess I'm going to drop off the screen here, but sure. I will be watching.
Thank you so much. I'll bring Andrew on in just 1 second. Thank you, Hans. Is anyone trading with Hans in Turbo Income? He has an income product here at Option Pit that is currently undefeated. We launched it maybe 2 months ago, and it has been a smashing success. If you have questions about his service, or if you want to learn more about income trading, you can send me a message after this, and I'm happy to send you some more information. Thank you guys so much for being here. I'm very excited to get going. Andrew will be with us in just maybe 2 minutes. He's getting his prettiest for everyone here tonight. Where is everyone from? Throw a message in the chat. Tell me where you're from. Tell me what you are excited to learn tonight. Andrew has a single number that is the most important number to him across the entire market. And tonight we're going to not only tell you what that number is, but we're going to walk you through why it's so important. We've got Arizona, Texas, New Jersey. Any Coloradans? I'm streaming live to you from Denver tonight. I was born and raised in Denver, which is a rare native at this point. Jose, hello. Hello from Denver. I love it. Andrew will be streaming in from Maine. Andrew lives almost off the grid, I will say. Does some polar plunges in the ocean in his spare time when he's not making money trading volatility. Seattle, Connecticut, another Colorado. I love it. Utah. Welcome, everyone. I know we're a little later tonight, so we totally respect your time. We're gonna get going in the next minute here, but welcome. Use that chat. I love nothing more than talking to you guys, answering your questions, because at the end of the day, we are here tonight for you. The whole point is that we teach pro level trading strategies to anyone. That's what we do here at Option Pit. So I'm going to take a second and introduce myself, and then we'll pull Andrew on live with us. If you've never met me before, or if this is your first time at an Option Pit event, welcome. I'm so glad you're here. My name is Hannah Selner. I am the Director of New Product Development at Option Pit. That is a post that not a lot of trading education firms like us have. I requested that my position be created when I came to work at Option Pit because I wanted to make sure that every trading strategy we put out had quality control. So every single strategy that you see at these events has gone through a 3-step process that I created with Mark and Andrew and Leisha and Hans and Frank. And we make sure that every strategy passes it. It's called CRT certification, and it stands for consistently profitable, repeatable, and teachable. We make sure that every single strategy we launch here fits all 3 of those criteria. So what you're going to see here tonight with the cash collision fits that criteria. So we'll get right into it. I don't want to waste anyone's time. We have some goodies for you tonight. We're going to teach you some things, and you're going to walk away with a trading strategy that is the most predictable in the entire market. And we'll show you tonight why that is. Andrew, if you're hanging out in the background, please join me.
I'm here. I have the pocket square.
Oh my gosh, I'm honored.
Now,
When he pulls out the pocket square, you know it's serious.
So I had to up my game a little because I know Hannah was going to look good, so I couldn't look like her dad showing up here right now. I had to try to jazz it up a little bit.
Andrew and I are going to continue to try to one-up each other until one time we'll both show up in tuxedos, and it'll be a great surprise for everyone.
Exactly.
Andrew, I am so excited. Let's get started with cash collision. I'm going to pull up my screen so that everyone can see it, and we're going to get right into the content that we've prepped for everyone. Let me find this, pull it up. Guys, let me know in the chat that you could see this screen okay. I'm sharing it with you right now. You should see cash collision right on your screen. Everybody see it? Give me a yes.
When I see cash collision, I always want to do this. I feel like it's the Wonder Twins, bashing the two forces bashing together.
If only bashing like that were good, because a cash collision is something we actually want to see happen. And we'll tell you guys about that tonight. Okay, I got a lot of yeses. Everyone can see this. Amazing. Let's get started. Tonight, you're going to learn a lot. If you don't have a notepad in front of you, if you don't have a Google Doc or something that you can take notes, I recommend you get that out. I also recommend we all spend enough time with our phones. Turn your phone off, set it to the side. We're not going to waste your time. It'll be about an hour, but I want to make sure we have your guys' undivided attention. What we're going to show you tonight is very important. We always start off with a disclaimer. You can read this yourself, but basically what it says is the information that we show you here tonight are our ideas. Andrew is a professional trader with over 3 decades of experience. What we're going to show you is his idea. Your application of this idea to your own trading style, to your own trading account, is your own decision. We're all adults here. Anything that you choose to do based off the information you see is your decision. That's all this is saying. So, Andrew, I'm going to start tonight with 5 stocks that we're going to look at. And I'll tell you why I want to look at these 5 stocks. These are the 5 most volatile stocks over the last year. So Apple is the first one. There's going to be a couple that you guys know, and there's going to be a couple that you won't know. But what we're looking at is volatility. So Apple is the first one. This is Apple's stock chart over the last year. When we look at these, I want you guys to notice one thing. Yes, it's volatile. Look at some of these swings, 20% up, 32% down, 24% up. These are big moves. That's stock price. Those are huge swings in the stock price. Tonight,
For Apple.
yeah, absolutely. Tonight, you should think about volatility as opportunity. And we're going to show you that. So Apple, there have been a lot of great swings you could have traded in the last year. Let's look at Palantir. Andrew, I know this is one that's near and dear to your heart. I think you were actually in on the early train on Palantir, maybe even before it made this 525% run. That's a huge move.
Yes, you don't usually make 100 grand on a 1,000 shares, but that's what happened. So it was a good one.
humble brag. Stock moves can be epic, and especially over the last year with volatility, we've seen some serious movement. Here's a stock that I was unaware of, but that Andrew pointed out to me a couple weeks ago when we were putting this together. Halo. I don't know if anyone's been trading this, but some serious stock swings here. 40%, 57%. Look at just the last few weeks, a 33% drop. Huge opportunities to make money off volatility. HIMS, I know we trade this in a bunch of our trading services here at Option Pit. One of the reasons being it moves a lot. Movement equals opportunity. There's been a 414% run up in the last year. That's crazy. Here's one you guys are going to know better, Amazon, and I'm going somewhere with this. Here's another one, Amazon, 64% run since August. Andrew, how nice would it have been back in August if you knew that this was going to happen? You could have just retired for the year and bought a bunch of Amazon.
If I had known, it would have just gone ripping like that. Yes.
Unfortunately, that's not something that we can predict as traders. If you see someone that says that they can do that, I'm going to spoil it for you right now. They're not being honest with you. If we could do that, we'd all be retired on an island in Tahiti that we own. That's not the case. So movement is great. Volatility is great. It's what makes trading exciting. But there are two things that could make trading even more exciting. Imagine if stocks like this made these rips more frequently. So imagine if in the last year, instead of Amazon having 3 of these moves, it had 10 or 15. That would make it more exciting, don't you think, Andrew?
Yes. It would almost give me gray hairs, even though I don't have any yet. But yeah, definitely make it more exciting.
Yes, you're very young. If it had more movement, more big swings like this, it would absolutely be a bigger trading opportunity. That's the first thing. The second thing that could make trading these even more exciting is if we knew that a stock would stay within a certain range. When you're putting on a trade, Andrew, knowing something like that, okay, this stock can only go to this level or it can only drop to this level. That's very valuable information when you're trying to set up an option trade, correct?
That is correct.
But
the range gives you an idea what's going to happen.
Right, but that's not something that you can do on stocks. Stocks have kind of unlimited upside, and it's hard to kind of know where the bottom is. There is a name in the market that actually moves more quickly than these stocks, does it more frequently, and stays within a range that we can predict. Take a look at this. This is the actual movement of a name that you can trade over the last year. Look at these swings. Not only are they bigger than most of the stock swings you just saw, they happen much more frequently. What do you guys think this is? Throw your best guess in the chat. If you are an Option Pit regular, I bet you know the answer. And if you're not a regular, you're going to become one. There is a
they're coming fast and furious, Hannah.
They are, and they are correct. This is the VIX. Now, if you have never seen the VIX set up in this context before, I am so excited for you. There is insane potential trading the VIX, and tonight we are going to show you what that potential is. We're going to tell you why the VIX is different, and we are going to show you a simple several-step process that Andrew uses to trade every single one of these rips that the VIX makes. Are you guys excited? Because I'm excited. I just worked myself up going through that. I'm so excited. Andrew, let's start with this. If you have that pen and paper out, get ready.
Yeah. So
why the VIX is different. Walk us through.
Why? So the whole thing, why is it different? So the first thing is it's not a real company. You can't, they don't make anything. It's not a stock. It has zero intrinsic value, meaning you can't trade it in for anything. It settles to cash. It is what I would call a calculation of sentiment. So the whole world has an idea what's going to happen with the market, and the VIX is the product that disseminates that information. It was created by institutional requests. So let me describe what that is. So when I was trading in the SPX in the 90s, before VIX existed, the number one request we got on the floor was, what was the volatility of the at-the-money strike in the SPX? It was quoted like 100 times a day, 150 times a day, at the money straddle. How is it? At the money, like, oh my God, I could still hear it in my sleep. So the reason why institutions wanted it is they wanted a number that they could use to price portfolios, to price volatility in the future, to price their options, that they knew somebody wasn't going to try to screw them, basically. They wanted that information. And it's a real reason why floors still exist today. Like the VIX and the SPX pit are the biggest pits on the CBOE floor for trading options. And the reason why is because they still want that live quote. So basically what happened is allow them to make a forward projection for potential returns of portfolios for option prices. So the whole idea is they got a fair price that they didn't have to shop around to a bunch of other over-the-counter dealers.
Andrew,
And
would you say
eventually that number became the VIX?
Would you say that the VIX is the number one number that pro traders check in their trading?
Yeah, all over the counter traders, all funds, everybody, it's the number they want to know because it helps price everything. Like
right.
It gives them an idea of how they're going to, basically they want that real number. They don't want it to be an imaginary number, which is what used to happen.
Let's take a little poll of our audience. There's over 200 of you here. How many of you use the VIX every day in your trading? Give me a yes if that's something you use. Give me a no if you don't. Now, if you are an OptionPit regular, if you own some of our trading products, you know that we make volatility and trading the VIX the center of what we do. It helps you make the best decisions when trading options. So if you're an OptionPit regular, you're going to know this. But if you're not, you may not. VIX should be essential in your trading. And tonight we're going to show you how you can make it essential. I'm seeing a mix of yes, no's, look at it, kind of. I'm seeing an always.
A lot of yeses.
Soon, always will be the answer for every single one of you. Because whether you know it or not, the VIX is an indicator of exactly how much the market can move every single day. And today we're going to give you that information. So don't say we never gave you anything. You're going to walk away tonight knowing how to use the number the VIX is and what it says as an indication of exactly how far the market can move. Andrew, I already alluded to 2 reasons why VIX is a money-making machine over stocks. Can you walk us through this a little bit, both the range and its cyclical movement?
Right. So the first thing is they have 40 years of VIX data. And it has stayed between 8 and 100, and mostly it doesn't go above 30. So the hundreds, there's only a couple of 100 outliers. Mostly it doesn't go above 30. The second part is that it's cyclical. So every year the VIX basically spends 25% of its time trading in 4 zones. Just think of it like area 1, area 2, area 3, area 4.
Right.
And what that means is that we can predict when it will change zones because it can't stay in one zone. Right. Once it's in a zone, it has to move to another one. Remember, VIX only stays in that zone 25% of the time. It's not like Apple that just goes straight up. It can go straight up forever. So, if you knew the range and cycle of a stock, how powerful would that be to help you create trades? And also what this does is as funny as it sounds, which it sounds kind of counterintuitive, but it makes trading VIX more predictable.
Right.
Because it has the range and the cyclicality, I guess is a word. So
I'll count it.
It is really the number one most predictable trade in the entire market. And that's mostly, as a trader, why I do it and why I use it. It's the first thing that I look at every day, because all information is going into the VIX. Remember, all known information is in that product. It's very, very few, actually none that I can think of where all market information goes into one place, right? And that's why I built a strategy that just is entirely around VIX movement.
So if the VIX is not a stock, it's not a real company, it doesn't have actual intrinsic value, we know that it's a calculation. So what actually is it, Andrew?
Well, it's this. So,
Terrible.
I know, you're like, everybody's doing this right now.
I'm having bad flashbacks to calculus right now.
I know. Okay, so the first thing is it's my job to make, to explain it, and then it's Hannah's job to explain what I'm explaining, basically.
Right.
So we don't expect you to remember the calculation.
No.
We don't expect you to remember the calculation for the VIX. Okay. It's really a reflection of expected volatility, right? In the future, 30 days in the future. It's
Right.
calculated by looking at all the option prices and determining if they're expensive or cheap. So you think of it like this: the more expensive the options are, if you look at the equation, the higher volatility in VIX is going to be. If the
I
options
totally
are
got
less
that. I
expensive,
totally got
that
that
means
from
less
looking at the
volatile.
equation. I'm glad
Huh?
you said that, because looking at the equation, I totally already understood that. Yeah, you're right.
So what it does is VIX takes the prices of all the options that it's looking for on our 30-day cycle from 23 to 37, actually. And it uses that calculation to create a real-time number. So as the option prices change and everybody changes their mind, right? Everybody changes their mind on what's happening in the marketplace. Actually, the equation distills it down into one number, that one 30-day number, which is the VIX.
Right. Right.
So it's not in dollars. So when I talk about the VIX,
Right.
it is actually a percentage, but I dropped the percentage. Nobody uses it. It's just VIX is 9, VIX is 45, VIX is 25, whatever the
Right.
number is. So we just talk about it in that way. So when Hannah says VIX is 25 or 40, that's what she means. So this is what you do need to know about the VIX. So listen to this for just one sec. So the VIX moves. What I'm trying to describe here is it moves more predictably, cyclical in a range than any stock in the market. Because if you think about it, look at an equity that goes up forever. It doesn't trade like that. So if you're trading, you know that you have a finite area.
Right.
For the underlying to trade. You can trade it up, you can trade it down.
Right.
Right. And it also makes these moves quickly. So it really presents the biggest money-making opportunity in the entire market for people that know what they're doing. And how do we trade it?
And tonight, if you see this and if you think about the VIX or you've never heard of it and you don't know what you're doing, we're going to bring you into the group that's in the know, because Andrew has been trading volatility and the VIX professionally for over 3 decades. So when I say he knows what he's doing, that's what I mean. He has a background of pro experience. So how do we actually trade this? What do we do?
So the first thing is, to harness the VIX's movement, this is what you need to know. First off, where are we now? Where did we come from, and where are we going? And once you know these 3 things, and this is what we've done, is I've built a system to trade each of these step by step, and that's what we're going to share tonight. Here we go. So number one, where are we now is what I call the VIX zone. This is where we are currently trading. To tell us where we came from, I have what's called the VIX direction. And most importantly, to tell us where we're going next, right? To forecast our trade, we use the VIX curve. So those are the three things: VIX zone, VIX direction, and VIX curve. And that's what I've built the trading system around. Now, what we're going to do is take a few minutes and walk through each of these, and then we're going to show you some examples.
If you have that notepad out, this is your moment.
This would be a good time.
This
to
is your
write some
moment.
things down.
These are the three things you need to know: the VIX zone, the VIX direction, and the VIX curve. We don't bring you to these events just to sell you something. We also bring you here to teach you something. So we're going to take a few minutes, go through each of these. And this is something you can use in your trading starting tomorrow. So let's start with the VIX zone. We'll go over this several times. You're not going to miss anything. So just stick with us. First, the VIX zones. Andrew,
Right,
tell
so-
me about VIX zones.
Right. So the first thing you do is if you Google VIX zones, nothing is going to come up, right? Because
I tried it
created them
earlier.
here at Option Pit. That's
I
why.
tried it earlier. It didn't work.
Exactly. So about 10 years ago, I was trying to figure out, because when I was a floor trader, I didn't trade the VIX. I knew how to trade volatility as a floor trader, but I had to figure out a way to teach this because I'm like, this is the best stuff ever.
Right.
As far as like VIX was a straight directional volatility play. I go, this is awesome. So anyway, 10 years ago, I basically had to come up with an idea to teach retail traders about VIX. So I came up with the zones just to see how predictable VIX movement would be. And my goal was to create zones where the VIX would live about 25% of the time in each zone, right? So with volatility, it's a reverting product, like Hans said. So it only lives in a range, which is what Hannah alluded to at the beginning. So just 25% of the time, it's going to live in a spot, in a range.
Right.
So knowing that, and basically it's backed by 2 decades of data, I can logically assume that the VIX would continue to behave that way. And still to this day, 10 years later, it spends 25% of the time in each zone, and it will do so in the future. And what that did is that gave me a predictable movement pattern. And in the last 10 years, it's held. So in each zone, we know exactly how much the market can move.
Right.
And that's the key part. So normally you just don't know that. But when VIX is in a zone, you know how much the market can move. And I think this is a good time. If you're new to this as a concept, you might want to write this down. Because I think it's going to be helpful for you. That's all I'm going to say there. So actually, I know it's going to be helpful for you. So you're asking these questions. What zone are we in? Where are we? Here you go. Okay, the first one is zone 4, anytime VIX is above 24. Zone 3, anytime VIX is 18 to 24. Now, 18 is the halfway point.
Right.
So funny enough, the market is sitting where today? Right in the middle of the upper half and the lower half, which would make sense because nobody knows what the heck is going to happen with Trump next, right? Or anything else that's going on. So VIX is sitting right there at that halfway point. Zone 2 is 13 to 18. And zone 1 is 8 to 13. And what that does is that's the whole life of the VIX. That's it. It's right there. That's everything it's going to do.
So some of you here tonight might have some questions like, why does the VIX not go all the way to 0? Or why is the halfway point of your zones 18 and not 50? Can you quickly explain both of those to the crowd here tonight, Andrew?
Well, basically that's one is why it's 18 is just how it samples, because it doesn't spend, like VIX rarely gets above 30. Like the fact that it gets to 100, I think has happened only twice. So most of the samples are much lower. And for VIX getting below 8, that basically is saying that the market's never going to move again,
Right.
which is just not going to happen.
Right.
So, and actually, to why VIX can't go below 8, you will understand why in a moment. We actually answer that question, I believe, in here, Hannah.
I think we do. So for you guys here tonight, one of the reasons why we highlight the VIX and why this is an insanely predictable opportunity to trade is because we know it stays within these ranges. Not only that, but we know approximately the amount of time it will spend in every single zone. It's about 25% for zone 4, 25% for zone 3, 25 for 2, 25 for 1. I'll show you the exact numbers in just a minute here. But by knowing that, it makes it a very predictable trade for Andrew to make. And we're going to cover that. But there's another thing that you guys can learn from the VIX zones every single day that you can apply to your trading as soon as tomorrow. And it's this.
Yeah.
You can use which VIX zone we're in to know exactly the amount that the market, and when I say the market, I mean SPY, SPX, can move every single day. So Andrew, walk us through this. This is something that every trader should know, and it should help you trade tomorrow.
Right. So the most important thing about this is the VIX means something practical. So I just I did the arithmetic for you. It's not super complicated, but I did it for you. So when VIX is in zone 4, what the market is looking for every day for 30 days, the next 30 days, it's expecting at least a 10-point move in SPY. So if you're going into a trade in zone 4 and thinking that the market is not going to move 10 points, we're only going to move 3 points or 2 points or 4 points, you're totally miscalculating what the market is already expecting.
Right.
Zone 3, you expect about 7.5 points a day. Zone 2, 4.5 points a day on average for the next 30 days, every single day. And in zone 1, and this is why you asked why SPY has a hard time or VIX has a hard time getting below 8, because what that means is SPY is going to move on average about 3 points a day. So if VIX is 0, that basically means SPY is not going to move at all for the next month, which is just not possible. So that gives you an idea of, in broad strokes, the rationale of why the zones are where they are and why you get an idea of why you can't be 100 forever. Because at 100, you'd be moving about 40 to 50 points a day in SPY. It's just not going to happen forever. So what this does is it gives you an idea in real terms what VIX and the zones mean. And it just equates directly to a move in SPY.
Right. And Andrew, we're not going to teach people this tonight, but depending on the zone we're in, there is an ideal trade to make in every single zone, one that is set to benefit the most from the type of movement that we see in those zones. So I'm seeing some questions in the chat about the zones, how do we jump from one to the other, etc. Today, you guys, the VIX closed at 18.6. So we are currently in zone 3. Over the last month or 2 months, we have been up in zone 4. We've dipped around a little bit, but we've been on the higher end of volatility, which actually presents a bigger opportunity for us as option traders, which we're going to show you in just a minute.
Right.
But understanding these zones, here's what I need you to take away from this, okay? Understanding these zones can make you money by making smarter trades, by understanding how much the market moves, and by trading VIX itself, which is what we're going to show you here tonight. So quickly, we wanted to show you guys some real results over 1 year of trading. So over the last year, we spent 18% of the time in zone 1. That was 53 days. We spent 34% of the time in zone 3, which was 68 days. We spent 27% of the time in zone 2, which was 86 days. I'm going backwards. Sorry, I just realized. And then in zone 1 was 18%, 45 days. So you can get a feel. It's about 25% for every single zone. And the reason why that's valuable for us is because, like Andrew's saying, when we enter a new zone, we know we're only going to be in that zone for a finite amount of time. We know we got to move to another zone. Whether we're in zone 3 and we move to zone 4 or zone 2, we don't really care about. We can set up trades to benefit on either move, a move higher or a move lower. But it's the certainty that we won't stay in a zone for over X amount of time. We know we have to move. That's what makes trading the VIX so predictable.
Right.
Give me a yes in the chat. Say, Hannah, I understand. Let me know you're following me there. That's so important for you guys to understand tonight, the trading opportunity that VIX presents, because it's so predictable.
And when Hannah says it, like, because when you're in zone 4, you know that 75% of the time, it's got to be lower. It can't stay there forever. When you're in zone 1, it can't stay there forever.
Right.
That's the cool part. Apple could stay at 200 for 3 months, right?
Right.
VIX cannot do that. It does not do that historically.
100%. So there's not a lot of guarantees in trading, and we do not throw that word around here lightly. But it is guaranteed that the VIX is going to move between these zones. So, Andrew, it's never stayed for a year in zone 3.
Nope.
Never stayed for a year in zone 1. Never even stayed for
Nope.
6 months in zone 1.
Nope.
Right. And because we know that, VIX is the most volatile and predictable name you can trade in the market, period. So for you guys here tonight, that means money. So that covers our first of 3 pieces, which is the VIX zone. So let's talk a little bit about VIX direction. This is our second criteria to be able to trade the VIX. Walk me through VIX direction, Andrew, why this is important.
Right. So this is the part 2 of our 3 parts. And the important thing to understand on this about direction is where we were, our current zone from the previous zone. So are we moving up the zone? So we're in zone 1, now we're in 2. We're in zone 2, now we're in 3. What this gives you is an idea of momentum.
Sure.
We're in basically what I would call an up zone momentum. We're going from a lower zone to a higher zone. Then you have the reverse happening. You go from zone 4 to zone 3. That's down zone. Again, change in sentiment, right? Down zone is a bullish market sentiment. Things are calming down. Up zone is exactly the opposite. It is a bearish market sentiment. And the higher zone, the more we jump zones, right? From 1 to 2 to 3 to 4, that means the market is essentially, going crazy, doesn't know what's going on, and all certainty is kind of out the window. So the important thing to think about with direction, just real simply, is what was the last zone I was in? Was it a higher zone or was it a lower zone? And that gives you an idea of simple volatility momentum, just going in a direction.
So currently we are in zone 3. We came from zone 4, correct, Andrew?
Yep.
So we're technically in a down zone.
We are.
Volatility and the VIX are going down, which, just reading this great slide we put together, means that the sentiment is bullish and the market is calming down. That's what we can read. So that's where we are right now.
Correct.
Now, on top of which zone we're in and the direction, so where do we come from, we get to the VIX curve. And I'm a little biased, but the VIX curve is the most important of this 3-ingredient recipe because it tells us where we're going. And when we know where we're going to go, we can build a trade to profit. So if you remember one of these 3, understanding the VIX curve is the most important. So Andrew, just give us an overview, and then we're going to walk through some examples very slowly so everyone can understand this.
Right. So the first thing is the VIX curve shows us the current VIX price and then the projected VIX price. So the projected VIX price is what we're going to call the future price.
Yep.
And that can be 30 days, 60 days, 90 days, 120 days, what we'll call serial. But basically, it is a predetermined expiration date in the future, just like trading cattle futures or T-bond futures or any other future. So another thing is when you think about the VIX future prices, they're based on sentiment, current option prices, and any upcoming market event. That information, all known information, is in those VIX futures. All known information is there. So it behooves you to understand what the market is telling you. Now, what I'm going to do here is just highlight the three major types of VIX curve. Basically, a flat curve where the market says, I don't know what's going on. I don't know if vol is going higher or lower. A contango curve, which says in the short term, vol is going down, but in the long term, it's going up. And then lastly, a backward curve, which means in the short term, VIX is going up, but in the long term, it's going down. And those are our three types of curve that give us sentiment. And to be honest, like if you understand and get to know what the curves do, it is the best information. I'm telling you, I didn't have this when I was a floor trader. I wish I did. Although it's made being a retail trader a lot easier. But it is the best information that you can get. And even if you don't stay with us, take the time to understand what these things are. I swear, of course, I'm going to teach it to you if you're here with us at Option Pit, but it is the best information the market is giving you every single day available to everybody. Most people, like Hannah said at the beginning, they don't take advantage of it. They don't want to learn about it. I think now I guess we get to look at some examples.
Another important thing to take away from this is no matter which curve we're seeing, no matter whether it's flat, contango, or backwardation, and we're not going to get too deep into that tonight. That's something Andrew teaches to his clients who join his services. But no matter which curve we have, you can trade it profitably. So at any opportunity, at any movement, we have a chance to make money. So I'm going to take you guys through. This is going to take 4 or 5 minutes. I'm going to walk you through what a VIX curve looks like, and I'll do it in Hannah language to make this super simple for you. And then we're going to show you some examples. Understanding this is the key to not only trading VIX profitably, but also making better decisions on other option trades. So there's a couple pieces of this I need you to understand. The VIX is going to be on this axis. The fact I said this axis should tell you that I didn't really understand the equation earlier. VIX is here, and then days to expiration is going to be on the horizon along the bottom, okay? I'll make this very simple. Like Andrew said, normally the VIX and the actual VIX number is between, on this chart I put 8 and 100. Most of the time it's going to spend between 8 and about 30, okay? The days to expiration on the horizontal line shows you what we project the future price of VIX to be. So right now, like I said earlier, VIX is 18.6-ish. The days to expiration would say, okay, in 30 days, we think the VIX will be 17. In 60 days, we think the VIX will be 16. So I'm going to show you an example, make this more real for you. On every single chart of the VIX curve, you're going to see 2 main pieces. The first of it, and we'll tell you guys how you can find this. This is available. It's public information. Andrew will go over that at the end. Mm-hmm. The first line you're going to see is the current VIX price. It's where we are now. So today, this line, and it'll cut across your chart, this line would say 18.6. This can move around, like Andrew said, depending on which VIX zone we're in. Sometimes it might be 28. Sometimes it might be 73. That would be crazy. We'd be in the middle of a serious volatility event. Most often it looks more like this, which is what today looks like. VIX equals 18. So that's the first piece you'll always see on a VIX curve. There will be a horizontal line, and it will be the VIX price right now. First piece. Second piece. These are your future projections of VIX price. So it's where we are going. It might look like this. Might say in 30 days, we're going to be at 31. That's projected. It doesn't mean in 30 days we will be at 31. It can change a little bit, and we'll talk about that. 31, 37, 37. Okay, you see the VIX curve. This is projected future prices. It could look like this. It could be, okay, saying, I think we're going to go lower. I think volatility is going to go down. These future projections are based on current option prices. And like Andrew said, they also bake in future volatility events. So Andrew, if I was to look at a VIX curve back in, let's say, December, right before the inauguration, I bet at the 30 or 60-day mark, there would have been a spike because that's a volatility event. So this would have assumed, okay, we may get volatility to spike on that day. So you may see some curves that look a little wacky. This happens more often, the kind of curve you're looking at right now. So let's talk about right now a little bit, and we're going to go through a full example. So let's say the VIX is at 18. And then we have those future projected prices below there, 17, 15, 15, 14, 14. What I need you to understand when you look at this VIX curve is that these two lines, the current VIX price and the future price, they have to run into each other. It is 100% certain that they're going to run into each other because the future prices are based off of current prices. So they have to collide. Once we get to 20 days, 15 days, 10 days, 5 days, they're going to run into each other. We love that because that creates what we call a cash collision, which is the whole reason why we're here tonight. So let me show you some examples. They can collide two ways. Sometimes the future curves move to the cash, and the cash is the current VIX price. You'll hear me say that. You'll hear Andrew say that. And sometimes the current VIX price moves to the curve. So let's look at an example. Let's say VIX is at 18. Here's our future curve. And that future curve is going to move up towards the current VIX. So right now we have 30 days to expiration. Let's say we fast forward 10 days. And now it's at 17.5. And then we go 10 days later. And now it actually hit 18. That is what we call a cash collision. That is one way a cash collision can happen. And in 1 minute, we're going to show you how we can harness this very predictable movement to make money. Because like I said, and Andrew backed me up, we are 100% certain that the VIX current price and the future price will run into each other. 100%.
That is correct.
100%.
It has happened every single time, every expiration since they launched the product.
Every single time.
Hannah has the days to expiration sliding toward expiration as well.
Correct. So in that example, the futures move toward the current VIX, but it can happen the other way. Let's say the VIX goes down. Things are calming down. Trade talks are getting quieter. Things are getting more stable. So a VIX that's at 18 over a 10-day period moves lower. Now it's at 17.5. And 10 days later, it's at 17. So the futures and the current curve have actually collided. What do we call that, you guys? That's a cash collision.
A cash collision.
It's a cash collision. And we love it. And I see Chip saying in the chat, I need a cash collision in my wallet. Amen. We are going to show you tonight how you can actually do that. So, Andrew, when do we make a cash collision trade? How do we know that this is something that's going to happen? So how do we time this?
So think of it this way. We care when things get moving. So it's the simplest way I can describe it. Anytime the VIX enters a new zone, essentially what that means is we're changing sentiment. The market is changing sentiment. We were this way this morning. We are now this way this afternoon.
Right.
Can change in a heartbeat. But also remember, VIX spends 25% of its time in each zone. So as it moves to a new zone, guess what it wants to do? It wants to go to a new one. So again, here, if we go from VIX being 13 into zone 1 to 14 into zone 2, we know VIX has to go to 18 or go back to 13 again. Right. Volatility, this is how it moves. Okay. You have 100% certainty it's not going to stay in zone 2. That's the important thing. What you do is now, once we have a move into a zone, then we put on a cash collision trade. That's the idea. As soon as we have a move into a zone, that is the impetus for a new trade. So when VIX moves back into zone 1, guess what? 75% of the time, it's going to be higher in the future. If you go into zone 3, zone 1 or zone 3, anytime you want to put on a cash collision trade and we expect that the collision will hit and we're going to get paid. That is the idea, just from history of the VIX.
I want to show you guys a real money trading example so we can help make this more real for you. Because if this is new, it should be. Normal stocks, normal equities don't behave this way. You don't know things that, okay, Apple, once it crosses 100, I know it's going to go to 125 or it's going to go to 75. You don't know that. That is a benefit of trading the VIX. That predictability doesn't exist for individual equities. It only exists when you trade the VIX. Thanks to Andrew, who constructed these zones and has been trading this for probably almost a decade. So let's look at an example. Let's say that the VIX currently is at 2310. And if you guys learned anything tonight, here's what you should be thinking. Hannah, I know that zone 4 starts at 24. So if the VIX came in at 2310, that means we just moved from zone 4 to zone 3. If you've learned anything, you know that when we change a zone, we are looking for a trade. So Andrew would be looking for a trade here. Current VIX price, 2310. This is not today. This is an example. Don't get crazy. At the start of this trade, this is a real money trade that Andrew made. The VIX was 2310, and here's what the futures curve looked like. It was below the actual VIX current price. So what does that mean? It means that the market is thinking volatility will go down. So this is at the beginning of the trade. We know that these two things are separated. We know 100% they're going to hit each other. So let's see what happens. After 2 days, the VIX has dropped 20.1. And our curve changed a little too. So they're a little closer to each other. That's after 2 days. Fast forward a little further. This is after 4 days. They're super close. The VIX dropped to 17.4, and we have almost a flat curve there. But they haven't collided next. They haven't collided yet. After 7 days, they have actually hit, and the curve has even gone below what the VIX is. That is what we call a cash collision. On this particular trade, Andrew made 113% in 7 days on a $1.50 option. So this is not something where you have to pony up $1,000 per trade, $500 per trade, 1 unit on this trade, and it would have cost you $150. That is just our first example.
Yep.
And in a second, we're going to show you guys what the current volatility landscape, what VIX looks like right now versus what VIX looked like at the beginning of 2024. And I think you're going to be pleasantly surprised by the number of cash collisions that we could have had. So we'll show you that in just a second. Andrew, I'm going to have you walk through this next example.
Okay.
VIX a little higher this time.
Yeah, so VIX starts at 2490, zone 4, for all of you scoring at home that memorized the chart already. So this gives you an idea of what the curve looked like. All the futures were below. Remember, a backward curve, long-term expectation, volatility going lower. Next curve, now VIX has dropped to 23 in backwardation. Again, futures getting a little lower. Things are being pulled down. VIX, again, after 10 days, we're trading 23, still moving down. Now we're trading 2120. We're getting closer to that cash collision area. It's starting to tickle, right? Now we have a huge, what I call inversion in the curve, meaning it's gone from backward to contango, which is usually very bearish VIX. And lo and behold, a day later, right, boom, we have our cash collision and close our trade because essentially VIX is right on top of the future. and at 163% and VIX dropping basically 6 points, I'm going to take my money, which is what we did. So this was kind of like a textbook zone 4, breaking through zone 4 and dropping all the way to the bottom of zone 3, literally from like 24 to 18. And at the bottom of the zone, good enough to take our money, and we'll just go on to the next trade.
Right. So every time, so even if after this trade is made and you sort of reset here, Andrew, when you still have, the VIX at 18 and now you have the curve above, there's another trade to be made because we know that those two things are going to run into each other again.
Right.
So
we'll just set up the next one.
Right. This works when the VIX flat line, that horizon line that you see right there, the current price of VIX, it works when it is above the futures. It works when it is below the futures. It can even work when it's even with the futures. Let's show you guys one more example here. We'll go through this one kind of quickly because I want to get to why this is so important for you right now. Here's another start of the trade. VIX is at 23.8. You see the curve there below. After 5 days, VIX has dropped a little bit. The VIX future curve has changed a little bit. 5 more days, VIX drops again. The curve adjusts a little again. And then in the next 5 days, we got a huge drop from 19.9 all the way to 14.18. And just like the last example, our curve totally flips. This was a real money trade that Andrew made. This was a huge winner, 800% in 15 days. And this option only costs 10 cents.
Yeah, it's when you drop 2 zones at once, basically.
Right, because we went all the way from basically near 24 all the way through zone 3, almost to the start of zone 2. This can't happen though, Andrew. And
Yes,
this
it
is
can.
something that right now is happening 2 times as frequently as it was a year ago. And we're going to show you guys that evidence in just 1 second here. I'm seeing a lot of questions about the specific zones, etc. Save them till the end. I want to make sure that we can answer your guys' questions. We're going to go over all of them. These wins can be huge triple-digit winners. And honestly, Andrew, the best part, in my opinion, is the fact that they're predictable. We know these lines are going to hit each other. We know it.
Right.
We know it. It's got to happen. And there's money to be collected while they move towards each other. So let's look at, we talked about this a little bit earlier, you guys. This is the VIX chart right now, like over the last year. So you can see these big swings in movement. Now, we have a little surprise for you. There are a couple other ways to trade volatility in addition to the VIX. And what they do is they exaggerate the VIX's movement. So there's actually something you can trade that takes the moves you see on your screen right now, and it moves 2 times as quick as these.
Yes.
There's another one that moves 1.5 times as much as these. So if you think these moves are big, there are other volatility products that you can use to exaggerate your wins, to really crank the maximum out of every volatility trade. This is something that if you join us tonight, Andrew is going to teach you this in and out, backwards, upside down, exactly when you should be using these to get maximum returns. Andrew, will you just walk us through this kind of briefly? Here, you can see a 1.5 times VXX and a 2 times. That's what I'm talking about when I'm saying you can get even bigger returns out of what's already huge movement.
Right. So basically, Hannah described VIX as our baseline. VXX owns the front month and the second month VIX futures on a ratio. And every expiration, they just own the near term and then they go buy the next one. Basically, that's its life. It just sells one, buys another all month long, and it does it again. UVXY will perform roughly 1.5 times what VXX will perform, owning those futures. UVIX will perform 2 times what VXX does, owning those futures. And SVIX is the opposite trade. It's the inverse short VIX product. It basically, it's your short VXX essentially is what it is.
Right.
And although they are launched by the same company, which is why they're the same names, but it gives you an idea if you want to kind of if you want to jack up the movement of VIX, you can just trade the ETNs and the ETFs. And
Right.
it actually makes it a little easier, to be honest, because the directions of each of them, you can ride things just a little bit longer, basically.
One of the benefits of also having Andrew as your mentor, as your teacher to walk you through this is you don't have to look at all of this and understand it right now, tonight, and use it tomorrow. He's going to teach you how to use these. The number one thing you need to understand from this slide is that what we showed you about the VIX and its movement can actually get even sweeter. There are things that you can trade that exaggerate these movements and make it easier to put on winning trades that have huge upside. When you look at this and you say, how the heck did you get a 800% winner? This is how. By using these other volatility products that can multiply that VIX movement. So, the $1 million question. Why are we launching a volatility zone trading product right now? Why do we care about this right now? Why is this so important right now? Well, to tell you why it's so important right now, we have to look to the past a little bit. This is a chart of the first 4.5 months of 2024. So this is showing you the VIX. What zones were we in the first 4.5 months of 2024? And it shows you how much we switched zones. So by reading this, we had about 6 zone changes, meaning we went into the zone, actually closed in the zone, came out the zone. There's about 6 zone changes here. This is back in 2024. So let's look at what this looks like right now. Okay. Look at all those green arrows. So far in the first 4.5 months of 2025, we have had 12 zone changes. If you've taken anything from tonight, you should know that a zone change is an opportunity for a trade. So basically, our trading opportunities have 2x'd from last year to this year. And the beauty of this also is some of the market events that have created volatility right now, Andrew, and for the audience here tonight, this is not going anywhere. President Trump's going to be in office for 3 more years.
Exactly.
We're going to see trade, tariffs, negotiations, tweets for 3 years. So this movement is going to at least stay the same, if not get crazier. What that
That's
means
what I'm
is
hoping. Yes, Hannah.
right,
Exactly.
the opportunity to make money
Right.
has grown. And if you are a trader right now, and if you are here listening to this tonight, you should be so excited. You are in the right place at the right time, because
Correct.
there is so much money to be made here if you understand the VIX, understand the zones, and understand how to trade this. And the best part of being here tonight is you don't have to do it yourself. You can do it with Andrew. We are introducing a new product here tonight. It is called Rip Zone. You can trade these rips between the VIX zones. We're going to walk you guys through everything that is included in Rip Zone. And this is starting tomorrow. So if you join, we are in a zone. We're right at 18.6. We might cross down into 18. We could have a chance for a trade in the next couple of days, Andrew, to be honest.
Yep.
When you guys join Rip Zone, we're going to send you Rip Zone trade alerts. So there's going to be 1 trade per week that is going to focus on these volatility products with the highest upside. So VIX, VXX, UVXY, UVIX. We showed you guys these names. These can exaggerate the profits and the movement that you can make off trading volatility. We'll send you the exact option chain. Andrew's even going to be live every day with this product. So every day for 30 minutes, you guys are going to walk through. Here's the zone. Here's the curve. Here's the direction. Do we have an opportunity for a trade? How does this help you with your other trades? How much should you be looking for the market to move today? That is going to be a piece of what you look at every day when you join Rip Zone. We'll also have replays. So if you guys can't be there, you can always watch the 30 minutes that Andrew will be live. He's also going to send you a daily brief. These will detail our 3 core pieces of Rip Zone, like I said, the zone, direction, and curve. It'll give you a roadmap for how the day is setting up. What should I be looking at? What volatility are we at? What does that mean for trading today? We know that some of you are new to trading the vol products. So Andrew created an amazing trading guide for the volatility products that walks through what each of them are, when they should be used, and exactly how you can harness them for max paydays on volatility movement. If you've been in a class with Andrew before, you know that he likes his class notes. When you guys are live every single day, he's taking notes. He's writing out extremely invaluable information on the markets, volatility, etc. We post these for you guys. So if you can't be at the class, you'll be able to actually see these after the class. Andrew also loves to give impromptu trade ideas. Let's say it's a low volatility day. We've been hanging out in zone 1 for a couple of weeks. He might have another trading opportunity that he'll be providing to people who are there live, or it'll be in the class notes, so you'll be able to see that. We've put together 3 intensive trading courses for you guys. There's over 12 hours on how to understand, measure, trade volatility for maximum profit. You will always have access to this. You can revisit these. You can bookmark them, take all the notes you want. These trading courses will help you understand everything you need to get started trading volatility. There's 2 more courses in there, the VIX Made Easy and VXX Made Easy, and those do exactly what it said. Make it easy for you guys. Over the next week, so starting next Monday, Andrew's actually going to do a live VIX Zones masterclass. So next week, for 4 days in a row, he'll be going over each VIX zone, what it means, exactly what type of trades you should be using in the zone. So this will be information that you can apply to your other trading strategies, not just volatility trading. Extremely valuable. Once a week with you guys, Mark is going to show you how to take everything we're learning about volatility and use that information to trade individual equities. You can still use this information to trade Apple, Palantir, Amazon, Microsoft. It's applicable. He's going to teach you how to do that. All of these things make up Rip Zone. You'll also be joining a community of almost 1,000 options traders here at Option Pit that already have this product, that are being grandfathered into this product. And that community is honestly second to none. So you will have a group of active traders every single day. You can ask questions, talk about the vol zones, talk about the biggest trading opportunity that day. All of this is included in Rip Zone. For 1 year of Rip Zone, it's going to be $19.99, and you'll secure that rate in. So you guys will not ever be charged more. If you join at that yearly rate, that's what you'll be charged every year. Tonight, we're also offering a 3-year opportunity to join Rip Zone. Now, as Andrew and I were saying, because of the increased volatility, the increased movement that's happening right now, Andrew, and the fact that President Trump's going to be in office for 3 more years, we created a special 3-year opportunity for you guys because we anticipate that being able to trade volatility at these levels is going to continue. So
for
we
3 years. I wonder why that is, Hannah.
Right. We made a special offer for you guys to actually get in and secure that rate at a discount. So I encourage you to join the 3-year. It makes the most sense for you. You'll have this for the highest volatility trading time we've maybe ever seen, Andrew, to be honest. So there's a lot of opportunity to be had using the Rip Zone to trade over the next 3 years. Now, if you have questions, pop them in the chat. There's a link right above Andrew and my head. It says, click here to join. You'll see a button. It's wiggling around. That's your actual order form. Click on that. Go click on it. If you stayed here for this long, I know you're interested. Click on the button. It'll be a summary of everything I already went over. There's also a phone number that you'll see when you go to that order form. It's also on your screen right now. We have an amazing team here at Option Pit. If you have questions, if this seems a little out of your zone, maybe you want to do a payment plan. I get this is expensive. It's not for everyone. Give us a call and we can work with you. Phone number's on your screen. All right, I'm going to go through some questions here. Andrew, you ready?
Yep.
Let's do it. The first one I have for you is, how do you establish the future curve, or how do you see that future curve? So what we're showing people tonight, how could anyone here actually access that starting tomorrow?
The easiest way is you go to VixCentral.com, and they also have historical, but that's the easiest way to see the curve. It's 15 minutes delayed, but they do have that available for you if you're a LiveVol subscriber like I am. I use LiveVol to see the VIX curve, but you can go to VIX Central or the CBOE website to get it.
There were some questions earlier, Andrew, about the zones. Do we ever jump zones? How does the movement from zone to zone work?
Well, like the huge winner, the 800% winner, was when we went from basically the bottom of zone 4 to the top of zone 1 in like 3 days. So you can absolutely jump zones, but you're going to jump down or you're going to jump up. But it is possible. And that's when generally when you jump a zone like that, you just take the money on your trade because the move is, out of category. So you want to take it. Right.
I like people in the chat are saying rip it, which I love. You guys should all rip it and join Rip Zone. I don't know if I didn't see Surf Dance and Hogan here tonight, but this would be his night with the rip it. I love it. If you guys don't know this, here at Option Pit, we also have a 14-day money back guarantee. So you can get into the service and you can try it for 2 weeks. This is not the Wizard of Oz and there's somebody hiding behind a curtain.
Right.
We believe in our products. We will teach you how to learn to do this. Andrew and Mark and Leisha and they have been teaching people how to trade for decades. This is not Andrew's first rodeo teaching traders. We have confidence in our products. So when you join, you can try it out. Give it a go. See if you like it. See if you learn and make money. The only reason we can offer that and still have a business is because our products work. So if that is something that's maybe holding you back or a question you have, join the service. You will have a 14-day money back guarantee that you can cash in, although you will not need it. Andrew, let's talk a little bit about, so right now the VIX is at 18.6. So it's in zone 3. It's sort of coming down. When do you think that we could have a potential trade on this with the current VIX movement?
I think probably this week. I'm just waiting for to dip below 18 again. Essentially, you're sitting there and it's hovering, right? It's like, should I go up? Should I go down? Should I go up? Should I go down?
Right.
Waiting, right? It's waiting for some kind of news to break one way or another. And whatever way that it breaks, we're going to lean that direction. So if we start to break below, we'll be in a new lower vol regime. We're going to lean short. We start to break above and everybody's like, because I think it's definitely odd feeling the last couple of days. Then we'll lean long.
Andrew, personally, how long have you been trading volatility?
Well, since I started trading, so that's since 1991. So 34 years. It's hard to believe, but yeah, 34
I
years.
know. You're such a young buck. It's very hard to believe.
I'm actually quite old, but anyway.
I do.
34 years, yes. Trading the volatility products per se, they were only really invented in 2004 or 5. I know Mark knows the exact date.
The VIX was 2004.
The data we use goes actually really back into the OEX, which was in the 80s. That's when it started. Vol, they started basically back testing their vol data or something like that. But
I've
been doing it for a long time.
I sometimes take some flack from the audience for calling you old, Andrew. So I just want to emphasize for everyone here how young Andrew really is. And in that vein, I'm going to continue giving him some compliments. On your screen right now, you'll see some testimonials from people who have actually traded with Andrew. I know some of you guys are also here tonight. Option Pit has been a business for over a decade. So I know a lot of you guys have been here and been trading with us for a long time.
10 years.
If you are willing, please share your experience. Trading with us here at Option Pit and learning to trade from pro traders is a different experience. It's very hands-on. We have intentionally kept Option Pit a smaller trading education company because we want you guys to actually learn from us. actually be able to make profitable trade, actually be able to understand things like volatility and make money from it. So here is just some feedback that we have received from some existing members. And some of you guys will comment on this in the chat also, I hope. But between the professional experience of our traders, the fact that we have that CRT certification to ensure the profitability and learnability of all of our strategies, you guys are in great hands with us here. And if for some reason you don't like it, again, like I said, you have that 14-day money back guarantee. I'm just going to read a couple of the comments that are coming into the chat. AE123 says, learned quite a lot. WA says, who is WA? I was wondering the same thing. He's always here. Ken says, been a great experience with OP. Steve A says, I've made dozens of times over what I've paid to learn over the years, and I literally bought it all. Steve A, we love you. Thanks for being here tonight. If you guys join the product, I see a bunch of you on the order form. I see some orders coming in. Who joined Rip Zone here tonight? I want to see a Rip Zone in the chat. Throw me a Rip It.
A new Rippy.
Those of you, there are some of you here that also already get this because you're grandfathered in. Are you guys excited? Throw me a Rip It. There's never been a better time to be a member of Rip Zone. It's why we're launching it right now. There are so many opportunities to trade volatility, 2 times the opportunities there were a year ago. So, I mean, I'm excited. I see some rippers. I see so excited. Most places don't teach about the missing link. Absolutely. Andrew, you are live every day with the Rip Zone audience. Can you talk a little bit about that and the value of actually sitting down with you and going through volatility every single day?
Well, the best part is you get every day is a new day. So you have to take the condition you see and say, hey, this is what's going on. And this is how we're going to build our trade following this guideline. And then we put our trade on. And then, you know, usually in class, I put the trade on. Well, I put the alert out first. People put it on. Then my students try to beat me to the trade. And, you know, I try to get a fill. And then we go about closing the trade and, you know, walking through how to exit the trade, the expectations for our trade. But more importantly, like why we're putting it on. You know, why are we doing it this way? We write up in the notes, create the alert system to enter and exit the trade. So it's kind of a, you know, step-by-step walking through. But the thing about the Rip Zone is we're waiting for things to get interesting, waiting for us to crawl into a new zone.
Right.
Before. So it's just like some days, like nothing's really happening. But as soon as we have a little excitement, we start moving, you know, into a new zone, then the wheels start turning and we can pull out our sheet and, you know, put our trade together. And that's what we're going to walk through with everybody.
One of the benefits you guys will get when you join Rip Zone is Andrew really does have a 3-step process. It's listed out on a full sheet and it goes through. If we're in the zone, that's your first criteria. Then if we're in up zone versus down zone, okay, we're in down zone. Then depending on what the volatility curve says, it gives you the exact trade to make. So really, it is a rubric that you could take yourself. I bet after you do this with Andrew for a few months, you could do these trades on your own. It is that simple, and he's really laid it out that easily. Now, right. That's not something that he just flipped a coin and got. That's 3 decades of options trading experience for you there. That's what you're paying for when you get Rip Zone. We did it. Andrew did it the hard way, so you can do it the easy way. That's the moral of the story. Andrew, there's a couple. TRX says, I'm in. Let's rip it. I
think we have the name for the students already. They're rippers.
I know. You're gonna have to sing. You're gonna have to sing that Rip It song, Andrew. You know, Rip It.
I'll come up with a Rip It song.
It's gonna be great. There's a couple questions I've been seeing, Andrew, about the logistics of the trade. So talking about how long are we normally in these for? What's kind of the cost of the trade? With what frequency will we get new alerts? Can you walk through that a little bit? Your plan for actually what the portfolio for Rip Zone will look like?
Right. So we're planning on for at least a trade per week. There will be riff trades depending on, when things move around, just like what I would call like more 1 to 2 day trades. The average for these trades is usually around 2 weeks. I'm going to say 2 to 3, because normally, like we're showing people, you need the curves time to kind of collide, right? It might happen in one day. It doesn't do that, doesn't do that super often,
Right.
but it's more like usually a week to 2 weeks to kind of let the curves let the curves collide. But that's what I would say your average time is. So you could have on 2 or 3 trades at once. That's usually about what it works out to be.
One of the amazing things too, Andrew, about your volatility trading, I can't tell you over the last few months the number of times this has happened. If you guys trade volatility with Andrew, back me up here. There have been days where we've seen huge volatility spikes. I'm talking about the VIX was at 18 and it's gone over 30. That has happened in the last 4 months. And everyone else I see everywhere else, talking online, talking on Twitter, talking wherever, my portfolio is blowing up. Everything's red. This is terrible. My long-term investment portfolio looks horrible. And I go into the room where people are trading volatility with you, Andrew, and they couldn't be more excited. And it's because they had a trade on that was ready to profit from a cash collision, from a VIX spike like that. And it really, when you talk about this being fun, there's nothing more fun I can think of than being able to make money on a day when it feels like 99% of people can't.
Well, what it does is it's nice to be able to give the market something when it's going nuts, right? You're renting the options for them for a while, and then you give them back when things are going crazy. So it's a good feeling to have something that you can close that's making money when the market is losing its mind.
Makes it a little easier to sleep at night. I think that's definitely true. What other questions do we have? Throw them into the chat. If you haven't clicked on that button, click on it. If you haven't called our team, they're absolutely amazing. I have a feeling that they'll work out some payment plans for those of you that are current customers, even if you're a new customer. So if you want to split that into a couple of payments, I think that's something we could do for you. Give us a phone call. We can work that out over the phones. But like Andrew said, he's going to be looking at a trade hopefully in the next few days, depending on how the VIX moves. And Andrew, you'll actually be live for this tomorrow. You're going to be live with the Rip Zone audience tomorrow at 11 a.m.
That is correct. We're getting the ball going. We're going to start ripping right away, Hannah Selner.
I love
11
it.
a.m. tomorrow.
I'm liking the name of this more and more the more we talk about it, to be quite honest.
It's rolling off the tongue easily, I have to say.
If you guys have questions, if you can't call us right now, I will put an email address in the chat for you that you can use. It's support@optionbit.com. Luigi, you were just asking about that. Give us an email. But I do recommend that you call us tonight if you can. Or, like I said, there's a 14-day money-back guarantee. Place the order. Place the order. Join us tonight. There is a zone change that's going to be coming. Andrew, there's a lot of courses included here. If you guys have a question, pop it in the chat. I'm going to take 1 or 2 more. There's a lot of courses included here. Can you talk a little bit about the content of those? I mean, when you add it up, it's over 20 hours of training that we have in here. That is invaluable, honestly. You could charge this for the training alone. So tell me a little bit and tell everyone here a little bit about what's inside there.
Right. So we're teaching you kind of from the brass tacks of volatility, starting at the beginning in what we call like the trail of the VIX, how you follow from the beginnings of how volatility works to how VIX works, the futures work, the volatility products, how they work, and then how the options work. So you follow the logical trail from sort of step A, to step F, I guess, if you want to say. So you learn the natural progression on how these things work, because the cause and effect, when you first start looking at them, is not always obvious, right? That's where I'm here to teach our students sort of how these things work. And when I started, it took me a while to figure it out, but I got to figure it out, whatever. Geez, I can't even believe it's 14 years, 14 years with Mark. So it's been a while. As a retail trader, that's what I am now, a retail trader, except I just happen to have 10 million option contracts as a floor trader first on the P Coast and the SIBO. So I had that little experience thing that helped me get to
That was the most Andrew description I've ever heard in my life. That little experience thing after casually mentioning 10 million option contracts. Right. Casual.
Yes.
We have been live for almost 90 minutes. I want to thank everyone for joining us. I really hope you learned something about volatility, the VIX, what it means for you as an option trader here tonight. I really hope that you join us and you join Andrew in Trading Rip Zone. It starts tomorrow. It's live every single day. Like Andrew just said, we're possibly going to have a zone change in the next few days. So the first trade is going to be coming. There's triple digit upside on these positions. They are all affordable cost. Some of the trades we showed you tonight, $190, $150. One of them was $10 for one option, that one that ran 800%. This is a very affordable strategy, and understanding volatility is going to benefit you across the board. I cannot explain that enough. As we showed, right now is the biggest time to be trading volatility in the last few years, hands down. There's more volatility, more VIX movement than we have seen probably since COVID, right, Andrew? Wouldn't you say? So, and before COVID, it was like
the regime is nuts.
Right. And before COVID, it was like 2008. So these opportunities don't happen every year. This is not something that happens all the time.
We do have a 3-year gift, though, right now.
We have a 3-year gift from the gods. And in return, we have given you a gift, a 3-year Rip Zone membership.
Yes.
That is a fraction of what 3 years should actually cost you. So I really encourage you to take that 3-year option. If you want a payment plan on the 3-year, we can do that too. Give us a phone call. Thank you guys so much for being here tonight. Andrew, I love hosting these with you. I can't believe I got you to wear a pocket square. That is a new record even for me.
I did. First pocket square ever.
I'm swooning. Thank you guys for spending time with us. We know that your time is valuable. Hope you learned something. And I hope you all join us in Rip Zone. Tomorrow's the first day.
Have a good night, everybody. Thank you.
Thanks, Andrew. Bye, guys.